The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone, and what a day. What an evening. Let's just go through numbers. First of all, thank you, folks, for the great show that you did here, all our hosts so far. Hopefully, I can keep that pace up. Well, let's just look at what we've got here. Back in I think it was the 1980s, when I was drawing actually started earlier than that, a whole cartoon series. It was based on Meter Maze, based on a ticket that I got over a long weekend once, and I did all these cartoons, and then I started selling them. And then I did a whole series of cartoons, the financial ones. It was this couple, and everything was based on what happened in the stock market. I've shown a couple of them in my CD introducing the Chapman methodology. But one of the cartoons I had was a guy's about to go off to work, and he turns around and says to his wife, well, let's see how the market acts today. And he goes off, and during the day, there's some terrible news, and the market sells off like 3% or something. And then later in the day, there's some very positive news, and the market comes soaring back, and it closes just about unchanged. Then he walks back into the house after work. He says, how'd the market do today? And he says, where did the market close? She says, unchanged. He says, I love these quiet days. So that's exactly what we've got here. Have a look at this chart. Very unusual. We've had just a couple of days like this before the flash crash. We had just, very rare. When I show you this, go to the 120-minute chart. No, let's go to the 10-minute chart. Look at this 10-minute chart. At some point last night at about, I think it was just before 8 o'clock, there's a sudden rally. Well, first of all, the S&P futures dropped 6 points. And then there's a rally that takes it up 10. So that's 17 points, 16, 17 points from the low to the high. That's at 8 o'clock. And then it's a 10-minute chart. So it's coming down. See these two moving averages cross negative? And then all of a sudden it takes off and goes down. And where does it go? It goes, the E-mini goes from 2152.50. Let's go to 2152. It makes a low at about midnight at 2028.50. Right? Let's get that again. 2152. It's 120 points to the 2028 level, and it starts to move to the upside. And as we speak, the E-mini is up $1.75, the Dow is up 60 at 18,393, and the S&P cash is up 173 at 2140.41. How'd the market do today, honey? Oh, not bad, it closed up. So this is fascinating. And there are a couple of things. I had a really good email this morning early on to say, let's see. Kevin said, Basil, I don't know how this isn't a pure gift from the trading gods for the long side. Republican president in the coda phase, seasonal run-up in the market historically. What am I missing? So I said, you're not missing anything. I think it's just timing, and that we need to see how this unfolds for a couple of days. After all, this is just wishful thinking. Whatever is going on here, nothing's changed from last night in the aspect of legislation or anything like that. So what I'm thinking is this. We might have made an internal low in the Dow. Let me go to the Dow futures, YM, right here. And the Dow futures were down. Can you believe it? 800 points. Here we go, YM. They did the same thing. They bounced up to the, let's see, the YM futures. That is up to 18,390. Let's call it 18,400. And it went down to almost 17,400, almost a 1,000-point move. And now we're back to just almost where we were last night at 8 o'clock. So this is going to be very interesting. My thinking here is, and it's really important, there's the 120-minute chart as this V shape. I call it the Groucho Marx eyebrows. My suspicion is that we're very close to some kind of a pullback. And that pullback is going to be more time now than price-oriented. And that we might have seen, at least for this phase, we might have seen the low in the futures at 17,400. My estimation yesterday was that 17,600 to 17,400 would be the big test. Remember I said 17,500 for me was key. Have we done that? Did the market just miss it? After all, look at the diamonds, because the diamonds are telling you what most people see. And the diamonds had a low today. They closed yesterday. The Dow Diamonds trading vehicle for the Dow traded at 183.38 close. Opens this morning at 181.75 and trading now at 184.10. So there's a really good chance that some kind of an internal low has been made, and now we might have to just wait for a residual low, and that residual low doesn't have to be at the same low, but it should be somewhere in the region of the close to lower than the close of yesterday, which is in the 182 area. So that's the way I'm looking at it. But there are a lot of things that we need to look at. So let's look at the numbers. And as far as the, we'll talk a little bit about the politics of politics, and now we're going to go into INDU. The Dow is trading at 18,409 in leg A. This is still a single leg A to the upside. The weekly chart, that's a very strong move. It's a very positive move. The MACD's turned up but not cross positive. The stochastics at 25%. That's good. It's not great. Let me get out of this. This is the 120-minute chart is making ABC. Is that a D? Was a strong leg up. I'll do this in a moment. I really want to get to some other things. The big picture is that we've been looking for leg D and possibly E in the monthly chart of the Dow. And the action this morning really saves the day as far as that's concerned. But it's still early. And as I say, there's 2 months to go. No, what am I talking about? 2 months is the whole of November, whole of December, and a little bit of January, and half of January. Yeah, so it's about 8 weeks or more. And anything can happen. This is a phase where all sorts of things can occur in terms of what the administration now decides to squeeze in before they go out. And I suspect that someone like a Donald Trump is already going to get started on the agenda so that when he steps in, he's got a plan. I hope that's the case because that's kind of what people are wanting. That's what it seems like. Okay, so enough with that. Now I want to show you something that to me is really, really important. Look at this chart right here. What is this? This is something that went from 99.12 on the 25th of October, plunges down last night to 95.89. That's 4 points. It's a 5.5% or something like that percentage decline. And right now, it is trading above, far above yesterday's close. And what is this? This is the United States dollar. And I've been a bull on the dollar, and I'll continue to be a bull on the dollar. I think it's going to go above 100.51 for leg D in the monthly chart. These are the two aspects that are really key. I'm going to come to the third one, which is absolutely imperative to look at, and that is the TLT and the TBT. That's bond yields, and I'll go to that as soon as we get back. Here's the chart of my triple yield chart, weekly chart. Basil Chapman, Dow's of 82, S&P's of 5 right.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank Bank is a member, FDIC, and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
I'm just writing down some of the, so I don't miss them, some of the questions that I had, about seven emails. That's GT. Okay, so here we go. So I wanted to look at the TLT. And this is in a sharp breakdown, leg D to the downside in the weekly chart. The monthly chart is suggesting strongly that that's a peak E, and that suggests, that suggests that the iShares 20-year Treasury bond yield is going to get quite a lot higher as the TLT pulls back. This could be a peak E right here. And this gap down, let me show you something. If I'm looking at the TBT, which is the inverse of the TLT, this is the ultra short Lehman 20-year Treasury bond fund. That spike is either F/B in the daily. It is definitely, I'm going to call it for now. Let me go to it. In the weekly, it looks like an E because of the smoothness with which it's broken to the upside. But I must tell you, I'm going to put this in because this is a Chapman Wave potential instant restart. Wow, if that's the case, by the time Donald Trump takes over, we could be looking at, and this goes to the next point that was made by Bob, the steepening of the yield curve. Because look at this. Here's the triple yield curve, yield chart. You've got 2774, 2.74. Up from 21.001, that's a 3%, is it? Just over 400, it's about 5% move to the upside in yields, 2.74. And now what we're looking at is the 10-year, there it is a leg F, and this could also be an instant restart right here, and a leg F in the 5-year. So this is a very critical point, and don't think that the market won't be a little nervous if the Fed doesn't have to say anything. But you've got three things going on here. You've got Donald Trump having mentioned before that Yellen is not doing the right thing, the implication being that maybe we're going to have a change at the head of the Fed. That's number one. Number two is the aspect of inflation is one that would imply a couple of things, but let's just talk about this as the second thing on the agenda here, that there could now be some kind of inflation, which is why we must watch gold. But I have to tell you, the move in the dollar says to me that dollar is still trying to go to a recovery high for that leg D in the monthly. And the third thing is that as I'm looking at this, you see the way the 5 and the 10-year note yields are close together. You see the steepness with which the 30-year has broken out. So this is a pattern that I always watch very closely, because look what happened over there. You start to get some kind of a top. We've got to watch this, because leg E, you can go to an F and a G. It's really unusual. D's and E's are what you usually get in this kind of pattern in the 30-year T-bond yield. And I'm watching this very closely, because we've taken out both the downtrend line. This is just the middle of the week, so we can't say it's at the close, but we have taken that out. And a question, Mr. Bull says, Basil, have you had an instant restart in triple yield curve in recent memory? I've got a G, and that was a completely different pattern at all. Let me just squeeze this close. I don't ever remember having... Okay, that's an ABCD. No, I do not remember ever seeing it continue high for that long in time, that it makes, no, all of them are peak E, peak E, peak E, 48.43, 48.58, 47.89, 39.30, 39.40, 39.97. No, I've never seen that before. But just remember, remember this line that I drew, and I said, we've been here before. Let me just move the line up and still say, hey, we've been here before. So far, there's nothing to panic about, but I am suggesting that this is something we've got to watch really, really closely. So now here are a couple of other things. So I discussed this the other day, and I said, wait a minute, so the TBT is something that is on my agenda here. It's acting really strong. It's how it flattens out. You see, if I go to TYX.X, look at the stochastic in the weekly chart. It's flattening out. It's not showing a sign of a pop and drop. So this is something I'm going to have to watch, and this is suggesting we're getting into the resistance area in the weekly based on the Chapman wave methodology. This is also possibly Chapman wave 5 in my other technique, and we'll watch this really closely, because if all of a sudden there's a reversal in this area, that'll be very good, because at this point I'm not sure I really do want to see the yield spike much, much higher. It just creates some kind of tension. But I spoke about the other thing. We missed it in my call. I don't know why. I just didn't jump in. It's really hard to jump in when you keep going day after day on the high side. But the SLX Van Eck Vector Steel ETF looks fabulous. The Alcoa missed that again. Wow, what a nice move. Alcoa up 217 today, 28.57. I'm sorry. We missed that. Look at this. You remember coal? KOL, the ETF for coal. And I said, is this telling us that there could be some kind of what's going on? Is this anticipating a Trump victory the whole of 2016? Well, it just made a little short-term top maybe. A leg E in the daily. This is the coal ETF. G/C still very strong in the weekly, trying for the 1517 200-period exponential moving average. And very strong. It was up 168%. Now it's up even more. So it's almost like 170% after tanking 90% during the Obama administration. So this is still the Obama administration. So this is a very, very sharp move to the upside. What is it anticipating? Look at the BKX. BKX. This is the bank index. Look at that move today, up 3.48% at 77.76. So on the short term, I think this is a very important thing, because it's telling us, I'll show you another one just now. Thank God we got out of it this morning, because we were stopped out with a tiny 2-point or 4-point loss and a 200 and something $70 stock. But look at this, Nokia, whopping gap to the upside. Raytheon, a whopping gap to the upside. The PPA, which I've been talking about for a while, which looked like it was topping out, had a huge spike to the upside. Leg C now in the monthly chart. So we're looking at something that says there's been a change. The IBB index is exactly what we're talking about. It was trading at 245, wasn't it? 246.71 on the 3rd of November. Today is the 9th of November, and it spikes up to 289 round number high. Is this just a bounce within the context of going lower? Well, there are other fundamental things that I think are part of the problem in the IBB. That's the biotech iShares. But at the same time, isn't that a spectacular move? 247 to 289. That's a 42 point. That's almost a 19% gain. So now let's be a little bit more reflective. When we look at these charts, let me just go to this one. You see this single leg A to the upside, got a huge test last night. It could have made that single leg failure by plummeting down as much today. Instead, there's been a very strong candle. And I think that that's telling us that the low that was made at 17,883 is going to be really significant for a number of reasons. We'll be back straight after this. Dow still up 87. S&P's now up 750. I'll be right back. Basil Chapman, Tiger Technicians.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So let's just go through this. I had a question today about the XLB. The XLB is the well, I don't know if it was a question, but it was mentioned. S&P Select Material Spider Fund, holding very well here, up 62 cents. This is a leg D, but this is a very unusual pattern in that you had your arch formation in a peak C. It held very well. And now you've got almost an inverse head and shoulders. So we've got to watch very closely to see if S&P Select Material Spider Fund, if the Home Depots So Home Depot right there, a gap down this morning, and now it's back up. It's at 124.31, trying to form some kind of a base here. And it's going to be very important because if it takes out in the next 2 weeks, if it breaks under 118, that is really bad action. But if it just hangs in here and at 124, it starts to head towards the 128 200 period moving average, I would have to suggest to you that perhaps we need to look a little deeper at this area. But the HGX index, let me do it this way. Actually, it's much better for me to do it this way. I was trying to do it with one hand. HGX, let me do it with two hands. HGX, there we go. HGX. What we're looking at is also the same like Home Depot, a nice strong bounce. But if I look at this chart right here, you remember this is the three times yield, the weekly the triple yield chart. That's the 30-year in white, 10-year note in brown, light blue is 5-year. If I take that away and I show you this chart, that is the chart of the South African gold index right there at the halfway point. That's not what I want to look at. This is what I want to look at. You see, you've gone to a trough D so far this week in the HGX index after making a peak D in the Chapman wave, second peak D at the top. And that makes this very important. And wood, WOD, I spoke about that the other day. The iShares were holding very nicely. The iShares Timber and Forestry ETF. This sideways action so far is good, but if it takes out the high of 51.17, I would suggest to you that this is a very big positive and that it's going to impact the weekly chart of the Philadelphia Housing Sector Index, the HGX, which is up 2.96 right now. It'll impact it positively. So this is what we need to look at. Now, I also want you to take a look. The Dow's now up 143. Just another burst of energy. Because I'm a little sorry that I didn't say I could grab the diamonds right at the bottom this morning as it opened up. It was a tough kind of thing to do because this is the repeat of Brexit. You remember after Brexit, it was very quickly where we went to recovery highs. That's kind of what is happening. That's the template that's being followed right now. What's really important is that we need to look at the sectors, and let's look at gold. I didn't finish all my look at the future at the different sectors. See, gold was up at $60-something. It hit 1338.3 last night. It's trading now at 1286, and it had a low of 1268. So I'm looking at this and I'm saying, okay, that hit the exact. Look at that. In the weekly chart, it hit that trend line. I'm going to do a workshop one of these days on how I do trend lines and things like that. I keep being asked the question. But look at this beautiful example. This would have been green. I just didn't have a chance to do that. And this should have been red. And that would have been red right there saying, in this area, you can expect either a breakout or a pullback. That's a Chapman wave inside track, repellent zone. It was repelled. And that puts me into the dollar and says that the DXY is holding really well. And there is a real good chance that it is going to try for 100.52 to make that leg D in the monthly chart. So that says that the Euro EUR USD, which had a huge spike up last night, leg A, B, and that might be C, I'm not sure yet, but it pulled back, and now it's at 1.09. Last night it was at 1.129. Very important. Tickle on the nose I got there, huh? Sorry. So, now, I had a couple of questions. I wasn't going to deal with this. I was going to just use it for my subscribers, but I'll mention it now since I had an email and someone then mentioned it. The Chapman Wave Short-Term Trend Index, that is saying, yes, there's a real good chance that tomorrow, regardless of where the futures are, the Dow should, thank you very much for the bless you, excuse me, there should be some kind of a dip to negative early tomorrow morning. Does it reverse completely? I'm not sure because I don't know where we're going to close. This is just buying spurts of people saying, oh my God, save the day, let's get in, let's get in. And that always makes me a little nervous, but the facts are the facts, and the market is actually moving very nicely. Now let's look at the VIX index, VIX.X. Look at this. I said yesterday, is this the United States election? Is that a top? Is that a peak F? That's a D, and then this gets that inverted caret because we went above the down arrow. Is that going to be a peak F? Wow, it didn't look like it last night at some point. But then I looked and I saw that the VIX index wasn't breaking out above 2301. And now we'll be able to put right here election. And that's saying to me that it might be quite some time. Oops, this should be lowercase, right? Election. It might be a while before we get this kind of spiral to the upside. And that confirms for me in many ways that we're probably looking at, now let me go back to let's go to the S&P. SPX.X. And that confirms for me that we could, depending on the close today, we could chop around a little bit, maybe not even take out today's low, but chop around a little bit, trying to build a case and more momentum based on the weekly MACD and stochastic and the S&P, even in the monthly chart, to be able to go higher and to break out to all-time highs. And the S&P, that would be 20, and let me see right there, 2193.81. Remember, we had a Chapman with 2-bar reversal right there for a double top at peak D. So that's what I'm looking at, all right? Now, there are a couple of other things that we're looking at. I mentioned how poorly certain sectors are done. And if you look at the SMHs, which we are still short, the semiconductor index, still short with a little bit of a profit here, they are really kind of struggling. They're down 47 cents at 68.25, struggling to make that arch formation, second arch formation. So I'm going to be watching that very closely. Now, if we look at my Dow Quartet, GE, it's a fabulous move up, 29.70, up 27 cents. We have a position, long position in it. IBM down 2.21. It's just not in this ballpark at all. It's just not part. Nice reversal, still down 83 cents. Nice reversal, but triple M at 170 really needs to get to the 173s. And UTX, my Dow Quartet, that's a very nice candle. Wow, starts the day off at 101.09. It's traveling at 101.4.39 in leg C. Nice action. So that's 2.5 out of 4 is quite good. And that's saying to me, yeah, there's still maybe a little bit of work to be done. Now, let's do this because I got those questions. So the Bob was talking about the steepening of the yield curve. Sean spoke about the trim gauge. All right, I mentioned that. And Julie wants to know about HO, talking about heating oil. Heating oil right now is in leg. I don't even know if that's an E because that's a 258, 251, 257. Okay, so that's D and this is E. So we're in leg E to the downside. Weekly chart's not looking very good. This is really suggesting that we have a pretty decent winter so far because heating oil doesn't look like it's going too far. Looks to me like the upside is 1.47, but if it closes under 139, it could actually go a little bit lower. Basil Chapman, Tiger Technician Hour, Dow's up 150, and the S&P is up 16. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
A good question, yeah. Let's see, the exact wording is, so looking at KSU, and what was the question? Oops, I'm just refreshing. Okay. Oh, I got another one. Yes, with the trend. Yep, the trend's very low, and that should say, you don't know the power of this move, but it should say that there'll be some weakness early tomorrow morning. So let's go back to this question right here. And the question was, KSU, 13% railroad, SSW, container shipping, and transportation. Yeah, so yesterday I spoke about CSX. You remember CSX now is up 5% at up 166 at 33.73. CSX core rails. Actually, I can't remember if I mentioned it to my subscribers in my opening call or whether I did it here. But look at that breakout in Chapman Wave Cup and Ladle. And that, I'm calling it B for now. I could call it F, but I mean, this is spectacular. 92% in the stochastic. And the IYT, which is the iShares Dow Jones Transportation Average Index Fund, it looked terrible earlier on, and now it's gone right back and made a new recovery high. So this is leg D/C in the daily chart, leg D in the weekly chart, and leg B in the monthly. And it's really very good action. There's just no question. Transportation index. So usual question about crude oil. Crude oil is pulling back, had been pulling back, and now it's up a little bit. It's up 12 cents. So the crude oil is just, it's almost like I was looking at heating oil. It's kind of stuck in the lower range. It's going to need the crude oil to go to the 46.66 or higher area. It's at 45.11. If it can do that, it'll say, okay, great, back into the trading band, going towards the higher part of it, and that's going to be very important. The other thing that we're looking at here was, what was the rest of the question? SSW. I don't think I've ever looked at SSW. That is C-SPAN Corporation. Oh, at $8.70. Yeah, is this a nibble right here? I'd say if you've been following it, this is kind of the area where you would start a position, expect either a V-shaped recovery if immediately by by Friday, it's got to be at 871 right now. It's got to be at 935, 945. That's number one. Number two is it could make a little H pattern because of the seriousness of the decline. So I wouldn't get carried away. You could nibble here at SSW, C-SPAN Corporation, a shipper, I guess. But I wouldn't get carried away right now. But it's a good eye because it's something containers, you want to be starting to look at containers here. Hope that helped you. Next question is, yeah, thank you, Bill, for the I didn't get 0.18. I got 0.24, 27 or something on the trend. But yeah, it was very low. Okay, now let's go to the nitty gritties. What do you do? So when I'm looking at, I'm going to go to the Dow Daily, Weekly, Monthly, INDU. This is a spectacular leg A to the upside. I'm always a little nervous about it But when you get 3 consecutive candles so far today that are just powerful to the upside, that really says to get a Chapman wave failure, this is that single leg A up syndrome that goes spirals up and then comes back down very sharply, sometimes giving back all the gains. You would have to see a pullback, and it needs to occur already by Thursday, this time Thursday, maybe the afternoon of Thursday. You have to be almost below today's low bar of 18,252. And if that's the case, then I'm going to say, oh, okay, now we go chop, chop, chop to the side as the initial outburst in the market of saying, phew, we were saved by whatever reason, and now we can do something else, says check to see what's working and check to see what's not. And that's really the issue. That was really my point to say. I don't want to go brazenly long this morning. It would have been perfect, obviously, looking at it now. But I think there's going to be a really good opportunity. And this is just a kind of an outburst by the market to say, hey, we had a fantastic move from the 700-point, 800-point decline last night in the futures to being up in the futures in the YM. What is the YM right now? Up 136. I mean, that is incredible. That is a move. That's almost 1,000 points. That is incredible. So you'd expect some kind of a give back. It's a little too soon to say, yes, we're breaking out. Question in the den, really a good question. What would you need to see to say to be breaking out to new highs? And all I can say is, look, at 18,485, you're only 210 points away, 215 points away from breaking to an all-time high. At an all-time high that starts leg D in the Dow, it starts leg C in the S&P, and I've got everything that I was looking for from my webinars, saying that this is a move that's going to take us to higher highs. Now, the question of 3 terms for the Democrats is out of the window, right? That's gone. So that means, how do you assess some kind of a major top? Is this very much like the Reagan years now, where we're looking at the start of a major move? No, you can't really say that. Let me just get out of this and do this quickly. If I've got time, I'd like to do that. I'm going to do it either today or tomorrow. Let's just see if I've got time. Close workspace. Let's go to my long-term charts. It doesn't matter which ones. Which was the last one I used? Coda phase. All right, that's fine. If I look at the very long-term charts, and I look at the NDX, has its peak B, and it's at all-time highs. 4,822, 4,816 was the high of March of 2000. That's a big move to the upside. That's not really what I wanted to look at. What I wanted to show you was back in 1982, we had, after the Carter years, if you remember, we had a dismal bunch of. Let me just get this here. So we're talking about 1982. So here we go. Squeeze, squeeze, squeeze. Now expand, expand, expand. Let's go back here. This is the black background chart. I hope you can see it. Going to 1982. Back, back, back. Let's keep going back. Okay, there it is. So 1982 is right here. And that's when Reagan came in, right? So he comes in. So what was it? 1980, I think it was, right? So 81, he starts the term, and it was really just chop, 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 and then sideways. So this is a very different period. Look at that lengthy from 1976 all the way through to 1979, 1980. It was in 1982, I remember, it was when my daughter was born. The very day my daughter was born, I didn't know she was going to be born. I said, I've got a major buy signal, and that major buy signal was right there, at about 787 was the low, 843. If I remember correctly, it was at about 815, something like that in the Dow. And that was very different. You can't compare technically what's going on now to Trump coming in as if it was after Carter. This is very different. We've had a major bull market. So I have to set that aside and say, no, we're looking at something different. Now, when I look at my Chapman Wave 5, which is unfolding now, all we need is to break above 18,668.44 by 1 penny, and we've started leg C in the Dow, and leg D in the Dow, and the S&P. Let's go back to the S&P. would be leg C if we can go 1 penny above 21.93.81. At 80.82, it starts leg C. So this is really a very important period. So that even if perhaps we've missed the exact low at 20.87, let's go to the Dow just back again for a moment. Even if that was missed of 17.883, if we're going to be going to higher highs, then even at 18,514 where we are right now, this would be very positive action if we're going to go to higher highs in the monthly chart. I'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks, we're back. So, yeah, these are the important aspects that I want you to look at right now. Within the context of the market, this is a really sharp move to the upside, and in the futures market, it is unbelievable. You've gone from the 2028 level in the E-mini. Let me show you the E-mini right here on the 10-minute chart. From 2028 right there, little double bottom low, at 10 minutes past 12 last night, to where? To 2158 was the high. 2160 is the high in the last couple of minutes. That is just an incredible move to the upside. And my suspicion is that we've got compactness, and when you get compactness, sometimes things accelerate, and you get moves that should take normally hours, days, weeks, doesn't matter, all compressed into a very short time frame. And what that does is it accelerates the response, and that response says that any pullback here, being such a big move, says that this entire candle from early this morning, from the low in the Dow of 18,252 All of that should be support over the coming week or two. If that's taken out, then you've got to start looking at the weekly chart and saying, okay, now we're going to have a little bit more digestion. That's number one. Number two is if tomorrow, instead of having the Chapman wave trend gauge flashing right now, saying there should be some weakness early in the morning, in fact, we have a huge move to the upside, and only intraday we pull back, and we don't even go negative in the Dow. I have to say that is a spectacular move. It compares with the three major candles that we saw from the low that was made the week of the 1st of June. 1st of July. And then it went chop, chop, chop to the side. So as it stands right now, compared to what happened last night at midnight when we were down 800 points in the Dow futures, this is extraordinary, up to almost 200 points in the futures right now from that low. That's 1,000 points. That is incredible move. So as I say, compactness sometimes says, now we've got the chance to assess, will the IBB hold up? That's the biotechs. Will the steels, SLX, is this like a culminating move right now to the upside? Or is it saying, no, what are you talking about? This is the big move for 2017. Steel, aluminum, Alcoa. Oh, what a big move up, 2.60 right now. I can cry. We had this, same as the X we had. Anyway, that's how it is. There's always time for more. We got one short that is still, even with this spectacular move, it's just acting horribly right now. Edwards Life Sciences down. It's up 68 cents at 92. We were short from 121.41. But let me tell you, it's not making up for the potential that we could have had. So I'm suspecting that this move in the last 12 hours or so, 10 hours, 12 hours, no, 12 hours exactly, has probably, no, it's about 14 hours, has probably made, there's a thing that came out here for the future says, with market uncertainty, with the president elections Tuesday and all that, and then at the end it says, please ensure that customers are informed liquidation of our liquidation policy should their accounts reach liquidation levels. And I suspect that you're going to get, there are people right now that have lost more money than they've made in years and years. There are other people that, if they play this correctly, have made more money in the last 10 to 12 hours than they have in not just a year, but many years. Because if they play this right, even if you bought near the lows of early this morning, this is a spectacular move that's in the futures. So with that being said, and you're about to go to your swim lesson, keep in mind, we are still looking at sectors. There are still some sectors that are not really responding all that well. And tonight is going to give us a chance, the next 2 days will give us a chance to filter out what are the plays for this coming period into the end of the year, the beginning of the year, and what do you want to kind of avoid. It's really a great, it's like a filter, and what stays in the filter you don't want, and what goes to, or you do want, and what goes to you don't want. Have a great day. We'll be back tomorrow, and Dow's up 182 points. And congratulations to Donald Trump. That was quite a David and Goliath.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.